Hi guys, welcome to the next episode of Market Insights from the Diaries of the CEOs. Please join me in welcoming Mr. Nimesh Shah, the MD and CEO for ICICI Prudential AMC. Nimesh has more than 31 years of work experience, more than 16 years of managing ICICI Prudential AMC. Mr. Nimesh Shah, Nimesh sir, welcome to the show. And
always a pleasure.
wanted to take some good insights from you and some bites on what is happening in the market right now. So it's nice of you to give us some time. Thank you
Sure.
so much for your time, sir.
Good.
So initially we want to start with this year has been a milestone year for mutual fund industry crossing 50 lakhs even on the SIP's book. How do you see the same mutual fund industry growing?
See, we are very clear that we don't have to create a new market, right? Already there is 200 lakh crore sitting in the banks, right? Why I'm so bullish about it, and it's very great to do business in India. See, I am from ICICI. There are three I's in ICICI, right? So the first I is that we are very lucky to be in a country like India, right? That which is an infinite market. Second is the industry is growing, and why I believe the industry will keep on growing as a country matures, as an investor matures, a depositor will become an investor. This has happened in every country in the world. So slowly depositors will realize that they are not beating inflation when they put money in deposit. So they will go for investment. So slowly a depositor becomes investor. So we have got 200 lakh crores of deposit in this country.
Already, yeah.
We are only 50 lakh crores. Just to put into context, 10 years back, mutual fund industry was 10% of the banking industry. Today we are more than 25% of the banking industry. This has happened in the last 10 years. So maybe in the next 10 years, at least we'll become one third. By 2030, at least we'll become one third of the banking industry. Banking industry will be 350 lakh crores. So even if we don't do much, this 50 lakh crores will become 120 lakh crores in the next 6 years. Right? So we always, at ICICI Prudential AMC, I'm always more concerned as to how I'm going to manage the growth that is going to come. Right? So the growth is coming. Right? How do we manage the growth? I was just noticing one email I had sent to Prudential in 2015. I had said that we manage 50,000 crores of equity asset. That was a big this one. Today we manage 450 lakh crores of equity assets. Right? So 9 times in 8 years.
In 8 years.
Right? So it's only, so if you don't make mistakes, I am very clear in my life. I run ICICI Prudential Risk Management Company. I know that market is infinite. I know the proceeds will keep on coming. I've got a very strong brand. People trust the brand. So with that, the money will keep on coming up as long as we don't goof up. If we don't make mistakes, wealth management, as you know, BajajCapital has been there for a long time. You have been there for 60 years, right? So it is an amazing achievement that over generations, people are trusting you. So trust is everything in this business. So if you don't goof up, the scale of the business is so much. So much money will get converted from deposit into investment. It is our ability to reach the customers. Market is infinite. So I believe that it is an infinite market that we are working in. Any brand which deserves the trust of the customer will get money. So we are only here to protect our brand. If we protect our brand and we protect customers' money, inflows will keep on coming in.
Coming to the point which you just mentioned on the risk management aspect, being such a large AMC now and the kind of money that is flowing in, what are the risk management tools and those risk management things that you want to do?
I always say that I run ICICI Prudential Risk Management Company.
Yes.
Right? When you manage money at a scale, it's only risk management. In life, I've seen it is very important to know what you will not do rather than get into what you will do. So over a period of time, I've been doing the same job since now 17 years. Right? So the first and foremost thing was risk management. ICICI Prudential can say today that in the last 25 years, there has not been a single incident where we have given money and the money has not come back. We have never had any credit issues. Right? This is because risk also signs off. Right? Risk is equally responsible. Risk has got a veto power. So there is a central risk department which does not report into the investments department. The risk department reports into the CEO directly. So that's the kind of structure we have always had. There's nothing new. Even 10 years back, if you have taken this interview, I have said risk management does not report. So there is somebody who's independent of the investments department, which is looking at the whole thing. His pressure is not on giving returns or anything. We have to see in our business, we have to see both. Whether the fund managers are taking risk at all. Because it is very comfortable to go near the benchmark and do not take any risk. Right? That also is possible. So risk lena essential hai. पर risk manage करना बहुत important है. You cannot make return without taking risk. So we have our processes which have evolved over the years. We have learnt a lot from the Western markets because they are way ahead of us in asset management. So how US companies manage trillions of dollars and still give performance. So something we would have done right, that our assets have been growing very rapidly and still we have been able to give a good experience to the customer. Right? So that's what risk management is all about. ICICI Prudential can take only 520 stocks, right? Whatever has been centrally decided. Any fund manager in ICICI Prudential can pick up only from there. If he wants a new stock to come in, first he has to get it approved by research. So there is a separate research department, there is a separate fund management department, there is a separate risk management department. So checks and balances are there everywhere.
That brings me to another point. A lot of large cap fund managers specifically were not been able to beat the benchmarks of late. And now we see some flow in the mid cap and small cap also, wavering. How do you foresee this these categories across three categories? How do you foresee these?
No. If you see between 2018 and 20, it was a very narrow rally. Some only 10 stocks were working in the market. Just go to 2018 to 20. Only 10 stocks were working. At that time, the fund managers were not able to beat benchmark because fund management, mutual fund is a diversified instrument. If the market rally is narrow, then mutual funds will not beat benchmark. By definition, you are diversified and only 10 stocks are doing, so you will not beat the benchmark. But now, if you see, there is ICICI Prudential Blue Chip Fund. It is only in large cap. You look at any parameter, 1 year, 3 year, 5 years, 7 years, right? It would have beaten benchmark. Right? So it was a very brief period between 2018-20. By definition, mutual funds being diversified, they were not supposed to beat benchmark. But today, there has been absolutely no issue. Most of my large cap funds, I can talk only about ICICI Prudential. I cannot talk about the general industry. Even our large cap index over any 1 year, 3 year, 5 years, 7 years, you look at, they will be beating benchmarks.
There's always this debate on the value and growth. And ICICI is known more for the value, the contra strategies and all. Where do you see that in the current scheme of things?
I would put it that one particular person in our company, Naren, who's the face of the company, he is known for value investing. He is our CIO. So the way we are structured, we cannot, why ICICI has done well across cycles is that we have never allowed, in part of our risk management, we never allow concentration of AUM to happen. So yes, Naren is a value or a contra guy, right? He manages money that way, but he does not manage more than 25% of the company's money at any point of time. There are fund managers, other fund managers who are into growth style, right? Anish thinks very, very differently than Naren. Rajat will think very, very differently from Anish. So there are, how do we manage money? We can't take all the money and give it to one particular person. The person's calls does not go right and the whole company does not do well. We have never allowed that to happen, right? We have always ensured that the money is distributed amongst various fund managers. In a short span of time, we expect some of the fund managers, out of 5 fund managers, maybe 1 or 2 may not perform, right? But over a period of time, over a period of 7 years, all are expected to perform. 2025 2024 somebody will perform, 2025 somebody will perform. So 1/3 of the assets of ICICI Prudential may not perform, but we are perfectly okay. 1/3 of our asset not performing over a short time, it's okay. So we diversify amongst people and that's how we manage money. So that part, so value and growth are, every value stock should grow and every growth stock should have value when you're buying, otherwise there's no point. So I don't think there are two separate areas. One is value, one is growth. Every value stock, if there is no growth in, say 4 years back you would have told me NTPC is a value stock because it was, nobody was buying it. ICICI Prudential was buying it by hordes. We had 9% of our fund in value stock called NTPC.
Oh wow.
Right? Oh. That was 4 years back. Today, now the same stock becomes a growth stock. Right? So it's a question of market perception. There is no, in our minds there is no clear cut divide. Every value stock should have growth built in. And every growth stock should be bought at the right value, otherwise you'll never make money. We are not believers that quality at any price can keep on making money, right? There are some theories in the market that you buy quality stocks and valuation does not matter. We are always valuation conscious. Even when we buy growth stock, we need to understand the valuation, right? So we would want to see the business model. We would want to see how the earnings will come 3 years down the line. If we can't understand that, we will not buy. So fundamentals and they become boring. But something in Y2K people were talking about eyeballs valuation, right? So different new theories come in regularly, but ultimately the business should make money and the earning should double in the next 5 years. Then only there's point in taking that stock. Otherwise, there's no point in taking the stock.
True. Two categories: balance advantage, and the second one is multi-asset. Balance advantage, don't you think is oversold in the category? Almost all mutual fund houses have it, and almost I think every customer that we talk to right now would have a balance advantage in the portfolio.
Not at all. The number of investors, there are 4 crore investors in the market. Okay. And how many people are there in my balance advantage fund? There are hardly in single digit lakhs, right? So there are not even 5 lakh investors in my balance advantage fund. I believe the market is infinite. Every person who is into traditional instruments. See, balance advantage is a great fund for people who just want a thoda tadka chahiye equity, right? They can't take volatility. I have seen last 10 years we have forgotten risk, right? 2014 onward, हमारे तो अच्छे दिन आ गए, right? Because the info started coming in. Markets have done well, but people do not understand that people have forgotten what is risk. Right? Everybody believes in the long-term equities is only going to go one way up, etc., etc. But then the short-term volatility aati hai na.
Absolutely.
So 10 years back, 12 years back, since 2011-12, we started this category, ICICI Prudential Balance Advantage Fund. So over last 10 years, it has given almost double-digit return. It has given almost 80 to 90% of the market, while taking only 50% of the risk in the market.
Yes.
How many people are able to buy in 2020? There are very few people who buy in 2020 March when everything was looking down. Balance Advantage Fund was buying at that point of time. So psychologically it is very difficult for people to buy when everything is bad. Right? I am just saying April 2023. Your investors also should see how many of you bought in April 2020. Right? Psychologically very difficult to buy. Between April and June, how many bought? India was not going to get over, but Balance Advantage Fund was sitting at 75%, more than 75% equity.
Wow.
Today it will be around 40% equity. Right? So that's the range. So you should be able to go against the market. I've been in Bombay in this business for a long period of time. And I have seen only one thing, that people who make serious money are the people who go against the current. Right? Are not the people who go with if everybody has bought, if your neighbor has made money, after that you buy equities, you are not going to make serious money. So we are believers of Balance Advantage Fund. We started that concept. And the whole concept came out of ICICI Prudential Multi-Asset Fund. It was called ICICI Prudential Dynamic Fund 21 years back.
Okay.
Over 21 years, it has given more than 21% IRR.
Wow.
If you see ICICI Prudential Multi-Asset Fund. So we strongly believe in this market. If you have to invest, I would not invest. I would invest in, if you see my investments, I would invest in ICICI Prudential Multi-Asset Fund because it has invested in equities. Some 57% will be equity, some 13% would be in metals, right? And the remaining will be in debt. So I believe that in an expensive market, we are not in a very cheap market. We are in an expensive market where I expect at a high level, there is going to be high level of volatility. So I would invest in a multi-asset fund today. And we are talking about a 100 lakh crore industry, right? If you are talking in the next 5-6 years, 100 lakh crore industry, हमारे balance advantage fund में तो केवल 50,000 crore है. Right? So I don't know whether Balance Advantage Fund is my biggest success, but I sometimes feel is my biggest failure. Right? That after having such a brilliant concept of giving double-digit returns over a period of last 10 years by taking such less risk, the fund should have been more than 3 times of what it is today, and it should have 10 times the investors of what it is today. So I don't think, and this particular category has no capacity constraints because you are buying when everybody is selling and you are selling when everybody is buying. So capacity constraint hai nahi. So the size can be as big as you want.
What is your view with the current cuts in the market, current fluctuations, volatility in the market? What is your view for FY 24-25?
So first thing, we are not capable of taking views for 24-25 just so short term. But one thing that the market has given exceptional returns in the last 1 year. I would be very, very cautious. Short term, so nobody can say anything. If I try to give you a view for 1 year, I will be lying to myself. Right? So I don't know. We are not here to take any kind of political risk and all. We'll seriously invest in business where we expect the businesses to do well over the next 5 years. I would seriously tell your investors, don't invest in equity if you've got a view of less than 5 years. because the markets are not cheap, right? I don't say markets are tremendously expensive, but markets are definitely not cheap. When markets are not cheap and you are buying in a relatively expensive market, there will be volatility. So the best strategy that can be is to buy a multi-asset fund or a balance advantage fund, depending on the amount of risk that you can take. If you can manage volatility, then take ICICI Prudential multi-asset fund. If you cannot manage volatility, chupchap take ICICI Prudential balance advantage.
Right.
Because then volatility to a certain extent is taken care of.
Alternates also we've seen quite a bit of upside over the last at least 5 to 6 years. And private credit markets also is building up quite a lot. PMS, AIFs, all of them are actually picking up quite a bit in terms of everybody's portfolio, especially the wealth UHNI, HNI crowd. Where do you see that growing?
I think for people who understand risk, for people who understand volatility, people who are ready to take concentrated bets, right? So concentration risk जिनको चलता है, तो उसके लिए alternates is a very good model. But in a PMS, what happens? You give me money, I'll create a portfolio for you. Next month, somebody else gives me money, I can create a different portfolio for him. So over a period of 6 months, the stocks that I buy will be very different from the stocks. So there is no layering that keeps on happening. In a mutual fund, if your AUM keeps on growing, there can be layering. You'll be buying the same stocks. So we prefer that mid caps, small caps. I would rather take in my PMS AF areas, because every month I can have a different portfolio. Right? So once upon a time we used to come with a lot of close-ended funds. Everybody thought that close-ended funds are for marketing, but they were for investment. Every month I used to get 500 crores of a small packet. Right? I could manage it very well. I could and we gave very good experience to the customers. So for me, my AF is nothing but with the close-ended funds that I used to run earlier. Right? So, and PMS is something that you can build. I think for a business also, it makes a lot of sense. And I believe that the customers can, if we can create a good experience by taking, but it is very important that they understand the risk involved. So please keep on informing the risk involved. We are very happy to do welcome calls also, so that they understand what is the risk that they are getting into. I believe that PMS alternates can become a very big business, but the customer should be adequately informed.
On the challenges front, where do you see geopolitical, where do you see the challenges coming in from? Maybe geopolitical, maybe any other challenge that you're looking at?
See, right now, whenever you're talking to people, especially people outside the country, everybody is talking about how to invest in India. There will be political challenge, political risk, which I am not an expert on. Right, so we have got an election. A lot of foreigners I know. I've been outside. In 2018, I tried to market a lot, but people in Europe would be very, very reluctant to invest before the election results are out. So people see it as a political uncertainty that is coming in. So that is what the outsiders feel. So political risk will be there. You have to be, see, this is a very stock specific market now. After the 30% return that we have got in the last 1 year, it is a very stock specific market. You need to do good research and be very clear which scripts you are in. Right? It is not that the entire market can make serious money from here. So first thing, for equity, the outlook should be minimum 5 years. Right? If it is less than 5 years, don't come in equity. And our job is to, once you have come in with that, our job in our PMS, AF or in mutual fund is to identify those stocks which can increase their earning. Right? It's not that without earning growth, right, there cannot be further growth in the market. So those companies which are able to deliver earning growth will grow well. And we see a lot of opportunities. Manufacturing in this country will do much better. I'm not saying a revolution is happening in manufacturing, but manufacturing in this country will do much better than what it has done in the last 20 years with Chinese competition. Right? So manufacturing, another one value space in the market is the banks. Banks have not grown as much as the other sectors in the industry have grown. So there have been specific scripts. There are script specific issues. There is a lot of fear on the banking system that what will happen to the personal loans, how will they raise money, where will the liabilities come from. But I feel banking is a good space. The private sector banks are a good space to invest in, and they have not done as much. So our job is to identify. ज़्यादा analysis करके फायदा नहीं है as far as your customer is concerned. You decide the quantum of equity that you can take. If you're nervous about the market and you can't take volatility, then take the multi-asset funds.
Multi-asset or balance.
And or balance advantage fund. If you can take equity volatility, then come into pure equity. That's what we tell people.
Although you just answered that, but I wanted to cover that in a slightly more detail. Which are the sectors you feel, or any themes that you feel are going to be?
So as I said just now, I think we like banking, we like manufacturing. Banking because it does not perform as much as it should have performed, and manufacturing is something that we like. I think if India is to grow in the next phase, this government has completed 10 years, so whichever government comes into the power, I think the real focus on India will be real estate, right? Makan, ghar. People will need houses, right? This country has to build a lot of houses. So anything related to real estate we like, whether it is cement, whether it is steel, anything that goes into create. I think it is very important for India's further growth that urbanization will happen. Just look at what has happened in China. India and China had the same amount of urbanization in 1980. So in the last 40 years, China's urbanization and India's urbanization, हमारे पास 40 crore people are in the urban area and 90 crores in the rural area. China is exactly the opposite. 90 crores in the urban area and 40 crores in the rural area. So, ulta hai. So, I believe that I'm not saying that we are China, but we will have many small towns becoming cities in this country. So, urbanization will happen. So, I would play the theme of urbanization big time. So, urbanization will lead to houses. And houses will lead to all kinds of demand, whether it is consumer durables, whether it is cement, whether it is power, whether it is steel. Everything will come out of this urbanization thing.
And then the second one would be banking, is what you...
I said banking, manufacturing and anything related to real estate.
Oh, nice. Okay. On the US front, US impacts everybody. So most of the ships actually follow the mothership. Where do you see the US economy turning now?
Yeah, US affects the whole world. US affects our country also in more ways than one, because there is a lot of money also from US which comes in and goes out of this country. So I believe that we are not bearish at all on US. I think US has done a brilliant job in the last 1 year. The Fed has done a brilliant job of last 1 year, how they have managed their economy. We have always said that there will not be recession, right? There was a fear 1 year back, everybody was talking about recession. US is booming, right? The all-time low unemployment, right? There is growth. Everything is, and inflation has been controlled. So they've got a huge fiscal deficit. So they will be in that business. How they control it, I am sure US will find it. So we are not of people who believe that US will be in a recession or anything. But yes, vis-a-vis India, we would always bet on the rupee more with the kind of depreciation that we have had over the years. We don't believe we'll have that kind of depreciation. Because US dollar rupee, I think rupee is in a good state.
Few pointers that you would want to give as an advice or wisdom to our relationship managers, and few pointers for the market in terms of for our client.
I genuinely believe that first, especially the RMs, this is a business of trust, right? We are sitting in Bombay, we are manufacturers. We can say we are relative return givers. So when the market falls 20%, we can always say that we fell 15% and we will look smart. But the RMs will have a very difficult job explaining it to the customer. So we are very conscious that I should not embarrass the RM in front of his customer, right? What is my business? That we have to be. So my message to the RMs is very clear that please don't try. I was a relationship manager. 30 years back, I was a relationship manager.
Nice.
I'm still in touch with those clients.
Oh, wow.
With whom I was a relationship manager 30 years back.
Wow.
So I believe that your client is the most important person for you for achieving some short-term targets, right? You need to have the relationship after 30 years, right? The client will grow, right? The client will grow, obviously. You will grow with the client. So how much you invest in your client and how much just forget your sales target, forget your bosses. Your boss is not the company which is giving you salary. Your boss is the client with whom, because it is good for Bajaj also.
Yes.
It is good for the Bajaj also that your RM is doing the right thing for the client in the long term, because then the Bajaj brand is saved, ICICI Prudential brand is saved, and the RM's brand is saved. It's very important for the RM to create a brand out of his this one. This is not a, so it is a brand business for ICICI Prudential, it is a brand business for you as Bajaj Capital, and it is a brand business even for the RM. His brand should work 30 years down the line. Right? So protection of the brand is the most important thing. We are dealing in somebody else's hard-earned money. We need to be very careful, and we should always be telling him what is the risk involved. What is the risk involved that the client should know. After that, let him not invest. Right? If he gets worried, after 15 days he'll invest. So
Yeah.
so have this filter that 30 years back, after 3 years also I have to meet the client.
That's nice, nice. And for the clients?
Clients is that do not invest after your neighbor has made money. Do not invest after looking at past returns. आप गाड़ी चलाते हो तो आप गाड़ी रेयरव्यू मिरर लगा के नहीं चलाते हो. आप गाड़ी चलाते हो तो आप सामने देखते हो, आगे देखते हो. तो पीछे का क्या हुआ है वो देख के. और मैं इसलिए नहीं बोल रहा हूँ that my past returns are very good. But past return is only an indicator. You have to see where you can trust. Whether an organization like Bajaj Capital, which has been there for 60 years, right? That's the place. People who are in the business for long term. I would only do business with people who are in the business for long term. Whether it is the relationship manager, whether it is the organization, or whether it is the AMC.
So thank you so much, sir,
Thank you.
for your time. I think.
Yeah.